Very welcome, welcome everyone. Very good. Here we are here at this new appointment and session. Welcome to the FX Street Tokyo Open Live Room. This is a daily room dedicated to live trading. Thanks a lot for joining in. We have a few usual suspects here, plus I always see new names. Thanks for joining in. Scott, good evening. Good evening, Carrie, Lucas, Peter. Good morning, rather, to some of you. We have ex-ambassador coming in as well. Roland, Label Lopez, Ivy, Morningdale, Adinda, Desi, Jake, thanks for joining in. Good night, FX Ambassador. So this is our FX Street Tokyo Open Live Room. It's a daily show from 8 p.m. to 9 p.m. EST, where we feature real trading and real stuff, real charts and real levels. This comes always at the heart of the Asian session with me, Giuseppe Basile, also known as the FibStalker. Thanks a lot for joining in today. As you know, I consider trading a business, and in any business we manage risk. The first thing we think about is managing risk. I don't even think about the potential of a trade. Indeed, believe it or not, I establish the reward to risk of a trade after I see a good level and trade it and get a free risk trade, what I call a free risk trade. All right. Thanks a lot, FX Ambassador. So let's look at risk management. Risk management is trader's job number one. It's not looking at profits. It's not obtaining 100% in 3 months or in 6 months, or you name your returns. But it's about managing risk. Once you have managed risk, all the rest it's on the upside. Okay, so one of the big mistakes that a lot of traders do is that they focus on gains first and then risk. But risk management is not a function of the gains you can get from a position. It's rather the opposite. The gains you can get from a position, it's a function of how well you manage risk in your position. Okay, so you will see this as a constant in my trading. So trading Forex and its derivatives, futures, options, and contract for difference. Another instrument for retail off-exchange transactions involve substantial risk of loss, and it's not suitable for all investors. You may lose all or more of your initial investment. Leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative for future results. Now, please also review the FX Street risk disclosure on the website. That's always important. The information, including commentary and trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research which should be performed before making your investment decisions. Indeed, the information I give and the material I give is for educational purposes only, so you are free to paper trade the trades we get. I, Giuseppe Basile, FibStalker Consulting Incorporated, and FX Street will not be responsible for any losses incurred on investments made by attendees as a result of any information in these webinars. And you can read the remaining disclaimer here. All right, so of course you are here because we want to dive into charts. Thanks a lot for those of you who have joined the May session of the FibStalker coaching program. I will open up the material and then start the active review with you in May. That takes usually 2 to 3 months, and I keep working with you until you are successful. So if you're looking for a complete approach to successful trading, look higher above the this window in the FX Street page, and you will find a link where you can get a very good deal on the coaching program. All right, so before continuing diving into the charts, let me say hello to everyone. Hello, that's me. And thanks a lot for joining again today. We're going to look at the charts now. Okay, so now stop babbling, Giuseppe, and let's get into the business here. So again, welcome, Jax, FX Ambassador, Todd, Pantelis, Jake, a number of new people as well. Thanks for joining in. I hope you are enjoying the show here so far. There is much more to come. The recommendation I always do is to help me help you, as you would remember from the famous Maguire movie, Johnny Maguire, whereas the main actors say, "Help me, help you." So one way to do that is very, very easy. It's to just, if you like the show, just tweet it and tell your traders buddy and your friends as well. If you believe that this information is valuable, why not open it up to your friends as well? So let's get into it. Of course, I'd like to start with my beloved US dollar, Canadian dollar. And today we had a proof that of two things mainly. First of all, this level here, this area rather, it's real. There is real participation at this level. It's the second time the market has dipped into the level. Might not be the last time. It's only the second time that has happened. And we got strong participation. When we look at the FibStalker timing on the smaller time frame, as soon as the sequence of measure move on the 30 minutes has failed, this move lower here has failed, the market had no one pushing this market lower, and the weekly time frame could actually take over. Okay, now does that mean that this 137.65 is not going to be retested? Of course, we cannot guarantee that. But obviously, this participation here is very, very encouraging, and actually it's shielding our two position, which we have with stop below lows here. All right, so very well done to all of you who actually still and keep believing in this position. This position is going to, believe it or not, and whether independently from what you believe, this position is going to give us a lot of good satisfactions in the weeks and months to come. So stick to it if you have a long here, because this is very important. And and there is more to come here. There might be other opportunities to enter. Now, this this test here didn't come at a convenient time in reality. It came during the European session, but typically I follow from 2 a.m. to 3:30, 4, sometimes 4:30 a.m. When there are opportunities. But this didn't come at that time, and actually I stopped at 3:30 a.m. last night. And so I was not able to take advantage of this opportunity. But, before this market gets into 158, yes, that's my projected level. 158 is my projected level for this market. Believe it or not, this market is playing weekly longs, weekly algo longs. That's my edge. That's what I do. What I do is to study the effects of algorithms, or how my good friend Dale Pinkett would put it, studying the footprints of algorithms on price, and those footprints are showing us a participation starting from that 137.62 level into the first target 151, but I won't be happy with that. I want to get the 158, okay, previous highs. That's where we're going to bring this price. It might take weeks, possibly months. If you stick with it, very small swap cost for these positions. If you stick with it, you're gonna have very, very large satisfactions here, and a perpetual smile on your face for the remaining of the 2016. So it's not perpetual indeed. Nothing is perpetual. So only one thing is perpetual. So if you want a smile, let's keep trading this market long, and I'm sure that you're going to appreciate not only the potential of the opportunity that are going to come here, and we're going to get multiple opportunities here to trade this market long. It doesn't end here, okay? Panteli is saying 2 opportunities that gave a free risk immediately, and unfortunately I did not get not even one of them. Oh no, Pantelis, that's very sad. Okay, and unfortunately, those are technical issues, and there is nothing we can do about that. Now, this opportunity came. This opportunity came on the day, on the 4th of February here, and we were actually in the room and looking at that opportunity. Okay, not in the Tokyo room, in my private room. So anyway, there will be multiple opportunities. So not to be worried there, Pantelis. Peter, you are very lucky. You left that kind of problems behind, and unfortunately, internet can be an hassle sometimes for us traders. So. I think the situation for this market is very, very clear. We have participation again at 137.62, and we have now the potential to start moving higher. Again, will this level retested? We don't know. The most interesting thing is that yesterday we showed, if you go back and look at the analysis we did yesterday, we clearly showed that this market can continue moving higher or laterally, even when the US dollar Japanese yen moves lower. And we will provide more information on that market as well, that it should start showing its end. So it's very, very interesting. This in 2 days going to be very packed and very interesting to understand, to help us understanding what's going on in this market. So US dollar Canadian dollar finds its again its participation. Okay, I'm taking some note here. As I at the end of each show, I like to do a recap as well and write a little article that keeps in your mind, that reminds you that the relevant levels we have to watch. Of course, I give a high level and larger levels in the Tokyo room. But if you decide to become a student, you will get much more as well. Now, let's continue here. And I'm being asked Kiwi and the pound versus the Japanese yen. Now, before I get into that, let me have a quick look at the news here, because we have to understand what's coming, especially for the pound versus the Japanese yen, because we have news. We had news today on the pound, and we're going to have news tomorrow, Wednesday, February the 17th, starting from tonight, 2 hours after the European Open, 2 hours and a half, the average earning index and the claimant count change for the pound. And then US session, we will start with the news, with the cluster of news on the US dollar, building permits, PPI, to start. And then at 2 p.m. we will have also the FOMC meeting minutes. So we might have a mover today, or I should say tomorrow, and that mover is going to affect the euro dollar possibly, and US dollar Japanese yen. Will tell us, I anticipate a continuation higher for the US dollar Japanese yen, a continuation lower for the euro dollar. Those news could give us the opportunity for that. So stay tuned, because it's very important we keep our tab on what's going on here. Okay, so Kiwi then. I brought the Kiwi here in first position because, as you know, I've been looking at this 65.51 for some time now, a few days, and finally this market was tested today. I believe this market is going to be retested. I know that some of you have tweeted about it. I think Jax, know if it's in today, he has tweeted about it, and he got a very good position. You can check on his Twitter account. I've just answered to him. And this market, though, could be in for a second test. So I think you have to look at this market a little bit in more detail here. We had a measure move that pushed this price lower, traded to the pip here, pushed this price lower into first and second target. There was the clear participation. You remember this area here, my blue area, that I've been looking at in the last few days. Unfortunately, didn't come into play until, look at how many days I was waiting this for. When the market came here back in, which day was that? Was the 9th, February the 9th. It's now 1 week ago, like last Tuesday. I was looking for the level never tested, okay? And, you know, it's 65, 61, the level is 65, 48. That's not a test for me. It's too big of a front run there, okay? So I will not consider that as a test. It's not a test for me. All right, so on the other hand, today there was a clear test of that level and participation, and this market is still short term, is still in short though, because it was not able to win this other small group of traders here which are pushing this price lower. So that's why I'm looking for this market for a retest of this level. Is that retest real or sure? Nothing is sure in the market. We always have a group of participants here. There is also a group that is pushing this price higher. And so this market at the moment is trapped between these two levels, 65.76 and 65.63. So it's very, very tiny level, 13 pips here of lateral move here. And however, we cannot exclude completely a potential retest of 065.50 FX ambassador. Okay, sorry, that's yes, that was you who asked for that. And so we cannot exclude that, and we cannot even exclude that this market is going to continue lower, although this level is very, very solid. It's an important level here. All right. The other market that you're very welcome. The other market is the pound versus yen. So we reviewed the New Zealand dollar that is at support now. This market is at support. And the other market is the pound versus yen. I mean, I think you are in love with this market, and I think this market is a little bit more difficult to trade and less opportunity compared to US dollar Japanese yen. So in a way, I keep not understanding, the focus and love for this market. Of course, that's only my own personal opinion. I don't know the reasons and the reason why you're watching this market, and I respect that. However, I believe that the opportunity in this market is much smaller here compared to the opportunity that we have comparatively, the opportunity that we have in the US dollar Japanese yen. If if there is a belief that this market can retest the lows, that's not impossible. However, before it gets there, it will need to actually pass through very important levels of support. So, this market, as I mentioned yesterday, is moving together with the other notable market that we are studying these days, and that's just want to show the daily here. That's our, and I'll put back the daily as well for the pound versus Japanese yen. So a retest of 160 will come for sure. I'm not completely sure where it's going to come now, or it's going to come after a larger retrace. And let me compare these two markets, because I think it's very compelling when we actually look at these two markets together. Let me get the daily here. Right, that test is definitely possible. FX Ambassador, and actually you can see the relative weakness of the pound versus Japanese yen compared to the US dollar versus Japanese yen. Okay, and I'm not here, trying to infer necessarily, that these two markets actually. These two markets for sure move together. The kind of expansion, as we can see, is different. This second market is the pound versus Japanese yen. It's more expanded on the downside. It doesn't mean though that the problem is that he has closer support, and that's the point for me. So I want to try to look at the market that has more potential for for a continuation lower with larger room for gains. Okay, so I think these two markets are linked here, unless we get news on the pound that are going to push the pound versus Japanese yen lower more. But we also have to, and I'm going to show this when I review the US dollar Japanese yen here, we also have to look at the US dollar Japanese yen and see what has traded, because the US dollar Japanese yen, as I'm going to show you in a moment, on the 4-hour time frame has found support. Okay, and you can see that as this week here. Now this could keep moving lower, but that support is still there, so it will need to be broken. I still believe and think, and this is confirmed in a way also from the move we saw today in the S&P 500, that this market can continue higher. So not a big edge for me on the pound versus Japanese yen, unless we review it on the smaller time frames. Okay, and we can always review it on the smaller time frames. And as you can see here, we see the US dollar Japanese yen moving, but that doesn't mean that this market is going to continue lower. We'll need to see where that move is going to stop. And of course, the euro dollar is going to move opposite that direction. Unfortunately, euro dollar has not found support yet. So as I mentioned yesterday, any rally in the US dollar Japanese yen is an opportunity to sell, believe it or not. And we can see that more in detail when we look at those markets together. So let's have a look at the smaller time frame here for the pound versus Japanese yen and see what we can see. And this market has come into the the opposing measure move here, and it has found a little bit of support there. That was dirty there, so it means that there is not really a lot of participation. However, as I mentioned before, this market is actually connected to the US dollar Japanese yen, which on the other hand has found support. Will this market continue lower? It is possible, of course. The point is that if I don't have an edge to trade it, if I don't have a way to enter this market, this market is not giving an edge to me. And if it's not giving an edge, I'm going to leave it alone. Now, mind that this market is within an area of potential support. That support came late, but came. Now it's retesting that area again, and we will see if it's going to keep pushing lower. If it does and breaks 162.20 here, we're going to see this market continuing lower into 161.86 and 161 basically. Now the point is, before that happens, we need to break that level, and remember, this is on top of a potential support level here. All right, so I hope that answered your question. Jason is adding there, US dollar Canadian dollar looks like an inverse held and shoulder pattern. On which time frame, Jason? Let's try and have a look at that. Maybe on a very, very large time frame here. Let's see what we can see. Are we talking about a weekly time frame, a daily time frame, or no? Because I don't look at this. I don't look at these patterns. I think all the patterns of traditional tech analysis can be explained with participation from algorithms. What I look at is level, and but if you see that and that gives you an edge, by no means, Jason, that's something good. I feel for you, Pantelis. Another frustration. I'll pass. It will pass, my friend. Okay, so internet problems there. FX Ambassador, thanks. I'm expecting a retest of 160. As I mentioned, that test will come. It's just a matter of understanding whether there's going to be a potential retest first, and then a retest of higher level, or it's going to move lower from now. New Zealand dollar, US dollar bouncing lower, and we kept this in on the observation here, and there is a reason for that because of this area of participation short. So this is a very good example of how and why we have to, why rather than how, we have to get fearless trades when we trade. A fearless trade is a trade that becomes risk-free after, and the way I play it, after a move that equals your risk. Once that move equals your risk, you can take half of it out, and you end up with a risk-free trade. A risk-free trade is not a trade that has a guaranteed it's a risk-free. It's a trade that actually protects your capital. Okay, because what happens is that if the market goes in your direction, it's true that you are carrying half of the position, but you managed risk at the very beginning. If it goes lower, in this case, and breaks you, hits your stop, you actually break even plus cost of trading. So you are protecting your capital. So it is true that you're halving your profits, but you're protecting your capital. And trading is about capital protection. It's not about maximizing gains, because there are other ways you can maximize gains, and I teach that in the FibStalker Methods coaching program as well, which is by working on money management and position sizing. And I have quite some expertise in this area. Indeed, in my master's in finance, I wrote a thesis that on position sizing, and so I feel very much very strong in this area. I've studied with Van Tarp for a number of years as well, position sizing. So and it is true that objective in tradings are reached through money management position sizing, are not reached through the edge. The edge is important, of course, but that's not the way we reach our objective in trading. All right, so I think that's very, very important. And that's a good argument for some people who actually oppose the idea of risk-free trades and managing risk in the first place, which is wrong to in my modest opinion. And so when we apply this concept to what we saw here, if you apply a risk-free, and let's say you are risk-free at this level, 65, now you don't worry, that this market is moving against you. Actually, you can sleep well. You can forget about this position. If it continues higher, it gives you a gain. If it moves lower below the stop or the low in this case, you're just break even plus cost of trading, and that's the way I recommend you trade. That should be the way you actually go with it. Okay, so yes, that's exactly it. That's the New Zealand dollar US dollar. The blue bar, it's a red bar indeed, but it's a 830 bar there. So there is participation short, but there is also a larger level long. Okay, so when we see these kind of things, we cannot do any assumption about the market. You should never do any assumption about the market, but generally, when you have to let the market play. And I don't watch every tick here. I'm not interested in watching the ticks. I'm interested in finding levels that are reasonable, that are strong, and they can give me a fairish trade. All the rest, I leave that to other players who want to trade the pips, or they want to trade the 10 pips. I'm not interested in the 10 pips. I'm interested in multiples of my risk, and I don't trade that way though. All right, so this is what we're seeing here for the New Zealand dollar, US dollar. So we mentioned again at the beginning the US dollar, Canadian dollar. Someone sees a reversed head and shoulder there. I don't see that. I see levels. But if you send a picture or share a picture and show that, so that would be very interesting. Then we talk about the New Zealand dollar, US dollar. It's correcting, but as you can see, this market can move very, very quickly. So you don't have to make any assumptions about these markets. And we spoke about the pound versus the Japanese yen as well. And again, I have no particular, let's say, edge in this market, or any particular level that gives me the up hand. We have in the US dollar Canadian dollar as well, and I believe we have in the US dollar Japanese yen. I would like to focus on this market a little bit, because this is going to be one of the best plays in the coming days and weeks, I believe. And that's why I like to spend time on it. Particularly, I want to show the level of support that we saw in the today. That's the level where this market has bounced. Now this market is being compressed between two levels here, and we could make the case that bulls have not yet broken the back of the bears here. For that to happen, we need to see 114.38 being broken on the upside. Okay, if that happens, this market has the potential to continue higher. And now the beauty of it is that we have the second target. It lines up with our first level of resistance, 116.33. So I'll be very, very interested if this market continues higher, in considering a short around 116.33. And that's where it's worth risking our money, not everywhere or at every level that we see. At least that's my approach. Okay, so the opportunity in the US dollar, the very first opportunity US dollar Japanese yen, I suspect that if we go higher, that opportunity will come for the pound versus Japanese yen as well as on the opposite direction for the euro dollar, because this market continues higher, the euro dollar will continue lower, and will continue lower to test one of those levels that we have looked at. So there is a serious opportunity for this market to end up into 115. So this is the US dollar Japanese yen here. So 116.30 rather. I'll remove this level. 116.30 is going to be the level we're going to watch. And at that point, either this market will continue trading in extension, or you can kiss goodbye to US dollar Japanese yen, and with it, I believe, you can kiss goodbye to the SP 500. Now, these are bold statements, Whenever I do bold statements, you should also know the way I trade them. I always trade after a confirmation from price. I never trade the level blindly. So don't quote me that, I said that 116.30 is going to reverse price. It's going to be a level that I'm going to observe very, very carefully, and I'm going to apply the FibStalker timing to that level. If the FibStalker timing gives me a signal, that would indicate me that it's very highly probable for me to get a furious trade at that level. Can you understand the way I look at these opportunities and the way I trade? I don't buy level blindly, never ever. And I believe that every one of you has a confirmation mechanism, of timing mechanism, call it as you want. I think every one of us has something like that. And you have to use that effectively. I try to use that effectively. Okay. And to me, effectively means to make sure that by applying consistently that procedure, because the FibStalker timing is very procedural, I can get a fair trade. And that's the only thing I need and the only thing I want. Indeed, my work, my job as a trader is to obtain as many risk-free trades as possible. And is anyone able to suggest why is that? Why it is that I want to get free trades, and I need to, and that's the best way to address the markets. Is there anyone who has an idea of why that would be the right way to go actually? Any idea? If you have ideas, please write them down. I'll give you a few seconds here before this comes to you, and you can write it down. So the question, let me reformulate it, is why would I be interested in generating risk-free trades? What's the the motivation for that? What is pushing me to do this, you believe? Am I afraid of, or am I risk adverse, or what is the real reason? If you know that, write it down. Write it down. Or if you have an idea, write it down in the chat, and let's have a quick discussion about that. I always say the trader's job number one is to manage risk. Why is that? So I have a few answers here, and thanks for participating. To sleep well at night is one for sure. Very well said, Pantelis. I definitely want that. I don't want to stress. I don't want to be stressed out. Imagine if you had a business and you're constantly stressed out. Because not because you have a lot of business, but because you don't know if your normal level of business you can maintain it. Okay, that would be a parallel there. Jake is suggesting to remove fear. Very good one. That's a good reason, but fear is a consequence of our uncertainty, or our feeling not sure about what we are doing. I mean, if I'm not sure about what I'm doing, I feel fear, and I have to remove that fear. Okay. Good point. Downside protection for market participation, Peter. That's a good answer there. Downside protection, managing risk. It's very, very important. However, this answer does not reflect the characteristic of the market that I'm trying to pinpoint and trying to defend from, because of and so sorry, just let me rephrase this. I particularly I want to pinpoint a behavior of the market that actually forces me to manage risk before anything.